Traditional markets began sinking into the afternoon hours, accelerating more and more as we neared the closing bell for the week, even as Congress raced to pass the largest stimulus bill in history. Meanwhile, the value of the United States dollar continues to drop, pushing into, might I say, bearish territory. Even gold and silver struggling today a little bit. Meanwhile, Bitcoin just threw itself off a cliff, breaking down from the range of price action that we've been trading in for the last few days. What awaits our beloved cryptocurrency as we head into the weekend? Find out in today's exciting episode of Breaking Bitcoin.
I'm Samson Mo from Blockstream, and you're watching Breaking Bitcoin.
Welcome to Breaking Bitcoin, recorded live Friday, March 27th, 2020, coming to you live from the underground bunker. This is nearing the end of week 2 of quarantine. This is your daily source for everything markets and finance. If you have any questions, drop them in the live chat. The moderators will direct my attention to them. I want to thank, by the way, if you guys are watching on YouTube, make sure to subscribe to the channel and turn on notifications, smash the like button, and let me know down below in the comment section what you guys would like to see in Monday's episode. Now, I want to thank all the premium members who came out for today's community mentoring session, which was opened up for Premium Plus members as well. We covered the new upgrades to the Premium Indicator Suite, such as the multi-time frame feature for the baseline, the new Wada Explosion strategy tester that we just released. We also covered lower time frame scalping with minks, the baseline and parallax, and the importance of emotional discipline and accepting a loss when it happens. So really enjoy that. Thanks guys for coming out. Registration for the trading competition is now live again. I'm not sure if the link is actually in the description, but you guys can head over to bybitreg.crackingcryptocurrency.com, bybitreg.crackingcryptocurrency.com. 4-week trading competition. It depends on how many people register, but we will have a BTC prize pool. Top 5 participants will receive Bitcoin payouts as prizes. So head on over there, register if you haven't. Should be a link down in the description below. If you guys do not have an account over there on Bybit, you guys can head to bybit.crackingcryptocurrency.com, get a $90 margin bonus when you sign up. Okay, so we've got a lot to talk about today. Looking forward to that competition, by the way. Really, really enjoyed it. We had to restart the last one because of 10 individuals that registered a little too late. So we're going to restart it and we're going to trade, and you guys can come and try and show me up. Now, the big news today, obviously, in the markets was airline stocks. Anyone that was fundamentally shorting them, and I talked about this for the last couple of days, due to the government taking stake in private companies, was handsomely rewarded. Of course, as we talked about, one of the things that they just started talking about today, but was all over the news, we started talking about it 2 days ago, was the fact that in the draft bill, the government, just when it comes to airlines, was essentially quasi-nationalizing them, right? Now, I understand people are going to give me pushback on this, but when we cover what we're going to cover later on today, when we cover the vehicle through which the Fed the Treasury really is financing this stimulus package. And so we talked about the $2 trillion for the stimulus package, right? As I've said, it's a $6 trillion stimulus package. When we get into the $4 trillion that the Federal Reserve is utilizing to prop up the free market, that is using to prop up essentially the economy and companies around the world. And they're utilizing functions that they are not allowed to do. And the only way that they're allowed to do this is by essentially modifying the laws. This is very important, and we're going to cover this later. And it just goes to show that yes, the government does want to nationalize things. Yes, this is the direction that they're moving in. Yes, this is something that we need to be aware of. Yes, this is something we need to be worried about. And the government taking private stake in airlines is something we need to be worried about as well. And the market responded in kind. Shares fell across the board. The CEO of Delta even came out today and assured employees that pays will not be cut, nor will there be involuntary layoffs this year due to this decision. Yeah, right. So we'll check back on that in a few months. Tesla, meanwhile, slashing 75% of their workforce at their Nevada battery plant. But GameStop is seeing increased demand for their products amidst the global illness. The FTSE, the UK FTSE, fell about 5% today. not just along with other indices, but outpacing the decline, obviously on news that Prime Minister Boris Johnson has tested positive. France's CAC and Germany's DAX fell by on average 4% as well today. Meanwhile, though, the Asian markets continue to climb a little bit higher, having more of a sustained recovery. Japanese Nikkei, the Hong Kong index, so all fairly doing well. Even the South Korean doing okay. Now, we're going to cover all this and more in today's episode. But first, let's get right to the markets. Obviously, make sure that you guys are following us on Instagram and Twitter. We post stuff there that you will not see anywhere else. Exclusive clips from the show and Jack's supreme editing skills coming live. We've also got a little bit of a treat for you guys later on coming up after the break. Hopefully, I'll get some time to put that together. But let's get to the live scene because we want to break down Bitcoin's price because our beloved digital asset just decided, I can't take it anymore. And just jumped. You're so young. There's so much to live for. All right, so here we are in the live scene. Let's get Bitcoin up. Wow, we've got a lot going on. Sorry, guys. All right, Bitcoin currently trading below 6,300 at 62.78. Ethereum coming in, what are we trading at? Around 129.40. We've got XRP at 17 cents, a little bit above 17 cents. We've got EOS at 219. Ethereum, Bitcoin, just kind of hanging out there, as well as XRP. Bitcoin just been on this push. Litecoin just hanging out below there at the bottom. Looking at how the CMEs closed earlier today. Again, we are not going to be technically closed above the baseline, but not above the baseline channel. So still in channel. What is that? For the CME markets, if you're utilizing the CME markets to determine your swing positions, then you're in a no trade zone. If anything, reversal baseline bounce, non-invalidation, because you do need to close above that upper channel. So overall, looking pretty good. Nothing really informative, honestly, coming out of the CME markets. Again, lowered volume delta divergence. Minx is still in the static zone, telling us that we should not be looking to trade. If anything, we should be looking for continuation shorts. Parallax is still bearish. Again, there's just nothing here that has given us cause to be taking leveraged or really at-risk long positions to the upside. Everything here has been telling us to mostly stay calm. The spot markets have told us to go spot long, but that can change fairly quickly and comes with significantly less risk. Now, we'll see how that market opens up. Looking at how we were kind of diving in, of course, getting over here to traditional markets, looking at how the futures for the ES, looking at how the futures for the SPY ended up closing a big, nice, juicy sell-off going down into the market close. The SPY saw this as well, as did the NASDAQ, as did the Dow. But the SPY, I think, actually, you know what? The Russell's been beaten up. I mean, if you wanted a leading indicator for the markets, just look at the weakness of the Russell right here, right? We had one fake break of this range, one little stop loss hunt above our local high, and then all the way back down. So it's trading back above the previous 2-day low here on the Russell. And with a massive volume coming in again, I expect to see some follow through come the Monday open. So it's really not the Monday open, but really the Sunday evening once the markets go back on for the CMEs. And of course, VIX still above 60, climbing back up to 65.54 high. Meanwhile, the euro dollar continues to soar as the Dixie has decided that, the Dixie has just decided that it doesn't want to be a currency anymore, right? The dollar is just decided, you know what? We don't want to be a thing anymore, right? Look at this. I mean, the whole, for like a 7-day sell-off on the Dixie, man, the value of the Dixie is rough. All right. Meanwhile, Treasury notes are having a little bit of a push to the upside here, closing back above the baseline. Again, early exits can sometimes be, what's the word I'm looking for? Annoying, but they save you a lot of money. And the SPY over here, opening and closing above the daily baseline. But again, let's not get too excited. Okay. Parallax is still telling us to stay out, and WADA never really gave us true full confirmation. Again, I know some individuals that did end up taking this, but again, they would have been a little disappointed. So let's see. Again, I want to see Parallax get bullish here. I want to see some more positive price action coming in on the SPY before I look to be taking long risk positions in traditional markets on the ETFs. Largely, I am flat. Okay, largely I'm flat on traditional markets. But you don't know. I mean, looking at the falling Dixie, And looking at everything, I mean, obviously the kind of incentive here is going to be to short traditional markets, okay? But you want to be patient, you want to be calm, you want to wait for the right trade, you don't want to be too jumpy, you want to wait for that right opportunity. So, directionally, I'm biased to the short side. Again, the market has responded well to some of the stimulus stuff, so we'll just wait and see. The nice thing about trading the way that we do is that we don't really get caught up in that, right? We could sit here and speculate and wool gather, and that's what you're going to see on CNBC and C-SPAN and Fox and MSNBC and NBC. That's all you're going to hear if you watch when they talk about finance in the markets. They're like, well, investors this and sentiment that and blah, 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 blah. Listen, all you need is a technical system. Your indicators will tell you when to go long and when to go short, and who cares? So I tell, people will, I often find this, right? I'm like, yeah, I'm going short on gold. And people are like, you're going short on gold? Like now? I'm like, yeah, this system told me to. And then gold will dump, right? Along with everything else. And, leave the fundamentals for CNBC, right? And fundamentals are for situations that you can kind of get ahead of, that you feel a lot of, value in. They're good for long-term investing, right? I read a really good strategy the other day. I was talking to I wouldn't say a friend, but just somebody that I know from the markets. And they were telling me that when it comes to kind of long-term investing, they wait for the SPY to drop 10%, and then they make a capital allocation, right? And then if the SPY drops another 10%, they make another capital allocation. And this person's been in the markets for a long time. Overall, they say that's worked well for them for the last 30 years that they've been in the markets. It's an older individual. So that's not a bad idea. That's not really fundamental. That's like half-assed technical. But for example, Bitcoin, if you feel that Bitcoin is very valuable, it's going to be the next leading global currency, or at least stands a good chance at being a competitor or on the same field, right? Which it is. It clearly is now, right? You can see that from its valuation, from its market capitalization, and from its use case around the world. With these other currencies, then if you see a big sell-off in Bitcoin, your mind should probably think, it's probably a good time to add to my long-term position, right? So stuff and things. Bitcoin on the daily. All right, let's get serious now. Super serial. Bitcoin on the daily, interestingly enough, over here on Coinbase, ended up closing below the continuation filter. So we had gone, I did anyways. I know that some of the analysts had already been in their hedges. I went ahead and put on a short before we descended from the range right around 4:30 p.m. Central Standard Time today, using the 4-hour system. Again, I saw what I needed to see. And took that position, coming back to the computer an hour prior to Mr. QC. Thank you so much for the 11 months of resub, really showing the Twitch love over there. Much love, my brother. Thank you very much, my friend. You keep it up, brother. All right. But closing below the continuation filter. Now, this is something that I'm not going to advocate, but it certainly is a strategy. And I am going to be... once we get these strategy testers out, breaking Bitcoin's the next thing that everybody's kind of been asking for me to publish. So I'll publish a couple versions of this that I want to publish out first, which is the initiator and then the exit system as well. So this is something that I'm not going to really advocate because we are above the baseline, so we shouldn't be biased to the long side really. But closing below that continuation filter does, and I talked about this setup that I did with XRP Ethereum the other day, and it didn't end up working out, right? The first kind of live trade that I took with it did not end up working out, but it's a concept that I've back tested. It has pretty good results, but if we close below that continuation filter, you can often see a retest of the baseline, right? It's often something that you can see, or if you then later cross and close above that level, which is almost always a loser, but that's a good exit signal for that. So anyways, there is a case on the table from a technical perspective for a retest of the daily baseline. So a movement down to the $5,600, $5,700 range. But I wouldn't get too extremely bearish at this point in time. For me anyways, I am biased to the long side on BTC. However, even the areas that I would be biased on, getting rid of the breaking Bitcoin and just looking at our traditional baseline indicator here, would be putting my eyes on that same level as well, right? Where are we at? We're tapping on the top of the qualifier, which is 1 ATR away from the actual baseline, the absolute baseline. Some people have asked me to move it to the upper K of the channel. That's probably not going to happen. But our entry zone here is going to be between 56.37 and 61.73, right? Below 56.37, we're going to be inside channel, in channel, and that's going to be a no trade zone. Let me make sure that we got this set. Yes, this is set to current. I talked about the non-repainting functionality of the baseline and why it's important to be set to current and not daily if you're on the daily, right? So again, 61.73 to 56.37 would kind of be the entry zone. And what do we really want to watch for here? Well, we want to be watching minks ideally, right? You know, we haven't really gotten an initial long signal, so we do want to be watching for that, a fully confirmed long signal for Parallax to work its way up here and get above and tell us that we are entering into a bullish trend. That hasn't happened yet. Parallax has kept us cautious and kept us from taking at-risk longs. Meanwhile, Minx has worked its way up. Now, Minx did cross under, which you could use in conjunction with that continuation filter cross under that I talked about earlier, right? So again, that's the Minx cross under is going to be something that people have access to, and I know that a lot of individuals are already using that Minx cross under in their strategies as an initiation signal, right? Okay, so we've got the entry zone here fairly well established. So I would be watching, again, a couple ways to do this, obviously. Standard way of doing this, obviously, on the daily is waiting for price to descend and consolidate in that entry level, or taking the reversal baseline bounce off of the upper channel of the baseline, or you can even scale upper channel, baseline, lower channel is a pretty good 3x multiple scaled in entry. We cover scale ins in the we cover scale ins in multiple videos, the baseline video. We cover this in the reversal baseline bounces section. So a lot of videos that we do have on scaling in and scaling out, we also cover in the BitMEX 201 video. So make sure that you guys have watched that. Let's see here. Of course, I am still sitting spot long. The bias is to the upside, so that I think that's where individuals' minds should be long term, looking for entries to the upside. And listen, if utilizing the baseline hedging non-hedging strategy, then one should be spot long on BTC right now. Again, my short was only 0.5% risk. I actually had put 2 of those on because I took the short, the market entry immediately, and then I set another trade for scale ins up into the trading range, right? Which didn't end up getting filled. So those have been canceled, and I'll pull that trade as we move down. Okay, pretty simple. Other than that, let's see what's going on in the 4-hour time frame. The Minx exit signal is working pretty well right now. 4-hour exit here, 4-hour exit here, 4-hour exit here. Again, a couple ways to think about that. Scaling into shorts, it's not really how I would do things. Obviously good exits for long trades. And then looking here at Minx, let's see how we got our settings here. I do have a set for primary signals. Let's see if we plot reversals here on the 4-hour. Give us a second. Yeah, kind of a little earlier. Not as good as the optimized Minx here. Short trade here. Still catching that, but most likely hitting your stop. And that's about it. Now, interestingly enough, if we do curl from here, Minx is an oversold on the 4-hour. If we do curl from here, that'll be a 4-hour long signal with reversal settings. And again, what would I expect? I would expect price to at least go back up to at least the qualifying line here on the 4-hour, 65.80. If not the baseline itself, 68.05, which really wouldn't surprise me. So if we don't end up getting the full follow through from our short, that's going to be fine. But everything is pointing downwards. But this movement we have to realize why our momentum oscillators have been trained now to an area of relatively low volatility. It's a pretty decent sized move to the downside. But again, not to be ignored. Okay. And keeping things very simple here. 45-minute time frame. Let's see what we've had here. A couple of scaled short entries to move us to the downside. And we're going to be getting a long signal if we get a little bit of a push here moving forward. And optimized Minx exit system doing pretty well also here on the lower time frames. Yeah, nothing to the long side for optimized Minx. Actually, there is a buy signal right here. And a short signal right here. And a short signal right here. Yeah, on the 45-minute candle prior to the sell-off. So pretty decent. I talked about the difficulties of Pine right now with TradingView lowering its compilation time to 2 minutes. So we'll push that out as soon as we can. We do have some extenuating factors here with TradingView. All right. So a couple things that I would actually like to see here. Looking at this, I I would actually favor, not gonna lie, I'm biased to the upside. I would actually favor, again, as I said, a movement back up to 64.80 at the very least here. If one wanted to take any kind of, if one wanted to take, for example, as I said, the 4-hour Minx might be signaling. We are crossed over to the upside in oversold territory, which is going to be the traditional, the way that Minx was, first, the way that Minx was first initially intended to be used, which was as a reversal indicator or detect buying opportunities. Well, it would be screaming at you right now. Again, falling water volume, falling water delta divergence, and that nice crossover in the oversold territory. Invalidation if we close below this 62.07. So pretty good R to R on that trade. So let's watch. Let's see if we can get any kind of validation on that. We'll go ahead and set this line right here at 64.80. And we'll set this line here at 62.13. Or did I say 62.02? Oh, 32.02. That's a pretty wide stop. 65.202 is also a pretty wide take profit, I'm not going to lie. So we'll see which one gets closed under first. Okay. Fairly simple. Ethereum as well, having a nice sell-off, still holding above the daily baseline. I would say Ethereum in even a more slightly attractive entry position. And XRP finally putting in after this reversal inverted hammer candle on the daily little shooting star pattern. We are getting a little bit of a pullback. But again, not a big sell-off. XRP recovering pretty well. XRP wanting to do things. Parallax is almost there. So if we get a sell-off on XRP, again, nay, I say it. And again, yes, I did short XRP. But nay, I say it. If we get a sell-off of XRP into the qualifying zone right down here, and if Parallax gets above the zero line, we're going to be in entry territory for an XRP USD long. So we'll see. Nothing confirmed yet, but something to keep your eyes on, certainly. EOS USD, nothing really going on there. I'm not doing much with XRP and EOS USD. I do have a grid bot up that's just trading the range, and other than that, that's it. Okay. I guess the outlier to talk about over the last few days has been XRP BTC just clawing its way up there. So definitely props to the hodlers here on the old XRP. Down here on the 4-hour, wouldn't have got you in until after the pump, but you still would have caught the last leg. Let's see. Yeah, daily baseline was right here. So again, nice 4-hour play there, roughly in the same area. And Minx, if tuned for reversals, would have caught the bottom on this one as well. And now signaling for a short on this current candle. So we'll see. I believe will be validated. Okay. That's about it on XRP. So we'll see. So current, I would say current invalidation for an XRP short would be 4-hour close above 28.08 if one was taking that 4-hour short signal right there. Litecoin, Bitcoin not doing much. We already talked about CME futures. Bitcoin dominance is testing the daily baseline. If we cross below, we could see some money flow into altcoins, but also the other thing that we could see is the entire market tank. But altcoins do become more attractive to trade, certainly when Bitcoin dominance is below the daily baseline. So watch that pretty closely. Or alternatively, the thing we need to be watching for is Minx, because if we get a continuation signal for Minx here and we close above the noise line, then I would expect alts to drop even farther. So again, always waiting for confirmation and watching for the signal. Nothing to do yet, but definitely Bitcoin dominance, something to keep your eyes on if you guys want to know whether you should or should not be trading alt to BTC pairs to the long side, really even to the short side most likely, because with Binance margin now and the ability to trade things against Tether, it's most likely easier to short them against the dollar. All right. Again, we talked about the traditional market selling off into the market close. Gold struggling today after a nice rally to the upside, similar to Bitcoin, but not seeing as much of a sell-off. Silver is interesting here. We talked about this as well yesterday. We are not there for a long trade, but we are breaching above the daily baseline. But none of our momentum oscillators, none of our momentum indicators are telling us that it's okay to go long. So patiently waiting for an opportunity on silver. Again, if we close back below the baseline here, I would view that as an opportunity to actually short again. And, it pains me to say that because I love silver, but you got to trade them as you see them, right? We'd be breaking the baseline and the continuation filter. We never broke above the initiator of BB here either, so good to see. If we close below 14, what is this? No, this is 1379. 1379 would be a continuation short on silver or a close below a cross under of Minx and the noise line. Okay. All right, we talked about the SPY. Same thing can be said for the Qs. Same thing can be said for the Dow. We talked about the Dixie. Brent crude. So let's look at Bentley crude oil here. One thing to watch. I'm going to be watching, again, something that if I wanted to jump at it, I would almost jump into that short now, but I'm not going to. I am going to wait either for the CS, the printed CS signal coming in from Minx here. We didn't get it, but we've listed lazily back down toward our previous established low over here around 2460. And ideally, what I'd like to see is a little bit of a rally in oil, at least back up to the daily baseline here, and then a cross and close below the continuation filter. That's what I would ideally like to see. Those are the highest probability setups right there. But just looking at this thing drift, and it is hard not to be directionally biased to the short side, and just expecting another one of these out of Mr. Bentley here. So watch oil, guys, if you guys like to make money. And of course, T-notes after consolidating for a little bit and putting a bit of a fake out in here. Again, might be just faking out again as we look to cross and close above the daily baseline. Parallax is still bullish. Wadatar is just, kind of telling us mostly to stay out of this. Again, yes, I know, guys. And Minx hasn't crossed back over to the upside yet. So watching T-notes, again, I think there might be a trade. And overall, not a bad, listen, historically, not a bad place to park your money in a recession, right? Historically, okay? But that might change, especially with what we're going to be covering later. All right. Soybeans, which I've also been speculating on. This is the ETF. Again, I had a nice gap up today, but selling back pretty much right where we started again. Not hitting, again, I do have an ETF trade on soybeans here, actually, but not hitting my stop loss, but really just kind of been right in the same place for about 2 days now. Okay. Let's look at watching sugar to see how it opens, because we did have a continuation short signal on sugar today. So we'll watch for the follow through on that. Other than that, didn't do too much work outside of the crypto markets today, except for one initiation into the euro pound. Took the euro pound to the short side today. So we will see how that plays up come Sunday's open. All right, looking to GBDC looking very similar to the CME futures in closing structure right here. Again, just this tight consolidation around the daily baseline, not seeing the benefit of the sell-off. Keep in mind, market tends to eventually, usually drift back up to where the CME is closed once we get closer to Sunday evening. Bitcoin volatility dropping off again. It's been a rough week for volatility trading. Let's see here. Let's look at tether dominance here. Again, market got really panicked, got really tethered up, and tether dominance is below the baseline. Again, something you often see in conjunction with Bitcoin being relatively bullish. And looking at the longs to shorts ratios, has flipped positive again, 2.6345. It's been positive for quite a while. There's always generally more longs than shorts on the old Finexico over there, but in terms of being across the daily baseline. Longs as well, creeping its way over there. And shorts having a little bit of a sell-off as we move to the downside there. All right. That's about all I want to cover in the markets. All right, so we've got a lot to cover. I want to get into today's, man, I am like really close to the camera. Why didn't you guys tell me anything? I want to get into today's analyses here, but before I do that, give me 1 second to get something set up. Okay, looks good. Let's get out of studio mode. Okay, so we're going to be covering a whole lot in today's Crypto Currently segment. Before we do that, of course, if you guys are watching on YouTube, make sure to subscribe to the channel and hit the thumbs up button. You can follow us on Instagram and Twitter. Links should be in the description down below. You can register for our trading competition over at bybitreg.crackingcryptocurrency.com. We'll be posting the link in the description if it is not there already. But I wanted to give you guys, obviously you guys love the weather reports. I want to give you the latest work from junior analyst Midwest Attempts. Let's go. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. Welcome back to today's Crypto Currently segment. Today, we got a lot to cover today. A lot of stuff that I want to talk about. So Microsoft has filed a patent for a new cryptocurrency and mining system. So detailed in the latest patent filed by Microsoft is a new proof of work crypto where energy intensive mining is replaced by basic human energy in their word. And this is the concept of the proof of stake. Now, if it sounds a bit like the Matrix or that episode of Black Mirror titled 15 Million Merits, well, you may be right. And we're going to take a closer look at this strange patent titled Cryptocurrency System Using Body Activity Data. All right. So according to the details, let me make sure I got the right. Here we go. According to the details included in this patent, Microsoft's proposed cryptocurrency would utilize body activity data, harnessing human individuals as a sort of ASIC mining rig to mine on the network. Now, on the surface, this seems a bit creepy. The idea of wiring humans up in series to some mining farm or in order to power the network while tracking their energy output sounds like a dystopian solution to solving the so-called energy crisis behind proof of work mining. But let's dig a bit deeper into how this is supposed to work exactly. In this patent, Microsoft describes the need for human body activity to perform the mining is actually pretty simple. It's not necessarily warehouses filled with humans chained to giant mouse wheels yet, driving electric generators yet, but rather brainwave readings or body heat emissions from users who are performing tasks scheduled by an information or service provider, such as viewing an ad or when using certain internet services. So good for advertisers. The patent goes on to explain how this type of human activity would capture and replace the massive computational work that current proof of work mining performs in securing conventional cryptocurrency systems, conventional cryptocurrency blockchains with proof of work. And that's because the data that is gathered from reading body activity can in itself be regarded as a sort of proof of work. Or as the patent describes, users can unconsciously solve computationally difficult problems required in proof of work. Now, in the patent, they explain how certain tasks, depending on the load placed on the user, would reduce or increase computational output accordingly. As for input, output, well, the Microsoft cryptocurrency powered by data gleaned from the human body would most likely work through a server that's providing commands to a user wearable device, like a wristband or, again, most likely a headband. The hardware device would be coupled to the user in order to verify if the body activity satisfies the conditions set by the system, and would award cryptocurrency to the host, which verified the requested data. Whoever brain output did the mind the puzzle, solve the block, right? Now, at this early of a stage, Microsoft hasn't specified if the new crypto will power proof of work mining on any particular blockchain, or if the software giant has its own network in mind. But if you were thinking about a matrix-style pod system of harnessing humans' energy to replace an ASIC mining farm, well, Microsoft just beat you to it. Coming soon to an XRP system near you. Now, the next thing that I want to talk about, obviously, the economic debate that is currently raging in the United States right now. This comes to us from Yahoo Finance. The economic debate that's currently raging right now in America, based largely on some of President Trump's latest comments, is whether the widespread shut down the entire economy remedy is worse than the threat posed by the Cerveza virus itself. Now, today, that debate has to be shifting. And this is coming hot off the heels of our historic economic stimulus package. New questions are now emerging surrounding the cure that is clearly the Federal Reserve's unprecedented intervention. Now, let's get over here and talk about this. This is from the Federal Reserve. If the central bank's balance sheets getting so deeply exposed to corporate bonds, asset-backed securities, commercial papers, and ETFs will result in an outcome worse than merely allowing financial markets to seize, well, I guess we shall certainly see. In a matter of a few weeks, the Fed has cut interest rates to near zero and used every trick in the 2008 playbook to try and stem the economic bleed-out. And it seems what little it's done to stabilize the markets has been superficial, and the turmoil has continued. So, the Fed has decided to step deeper into these uncharted waters, announcing the $1 trillion a day repo program, along with their QE into infinity policy and $625 billion worth of weekly bond buying moving forward. And the result is soon going to be that the Fed's balance sheet is going to carry 2/3 of the Treasury market by the end of the year. But it is this series of newly announced rescue programs by the Fed that we want to pay special attention to. And it's going to lead you to ask what sort of long-term consequences are in store for the function and role of the Federal Reserve and the allocation of capital in financial markets. Now, a lot of noise is obviously being made today about a series of, let's call them alphabet soup programs, which include the CPFF, the Commercial Paper Funding Facility. That's going to involve buying commercial paper from the issuer. The PMCCF, the Primary Market Corporate Credit Facility. That's buying corporate bonds from the issuer. You've got the TALF, the Term Asset Backed Securities Loan Facility, a funding backstop for asset-backed securities. The SMCCF, the Secondary Market Corporate Credit Facility, which facilitates the buying of corporate bonds and bond ETFs in the secondary market. Listed nicely right here. Not to be outbeat by the MSBLP, the Main Street Business Lending Program, which complements the Small Business Association program, but extends it, lending to eligible small and medium-sized businesses. Now, technically speaking, the Fed isn't allowed to do any of this. The central bank is only allowed to purchase or lend against securities that come with a government guarantee. So that would be Treasury securities, agency-backed securities, mortgage-backed securities that are issued by the government, and the debt issued by Fannie Mae and Freddie Mac. That's it. You could argue that they could also be municipal securities, but nothing in the shopping spree that we just described above here. Nothing in the shopping spree that we just described here. So, how is the Fed going to get away with this? How is the Fed going to get away with this? The central bank obviously cannot really purchase any of this stuff. So the Fed is going to be taking the role of banker here and allowing the U.S. Treasury, not the Fed, to buy these securities. So the Fed's just going to be acting as a backstop to all the loans, right? The Treasury is going to be distributing the loans, and the Federal Reserve is just going to be backing it and providing finance. And the Federal Reserve has hired BlackRock to actually direct the buying of these bonds and securities and handle the administration, right? So the thing here is that they've created what it's called an SPV, a special purpose vehicle, to be able to do all this, which empowers the Treasury to give these loans with the backing of the Federal Reserve. And one way to certainly look at this, as I am, is that the federal government is now in the process of nationalizing the financial markets. That's what's going on here. The Fed is fronting the money to do it. The Treasury is the one doing it, and BlackRock is supporting it by executing the program. Now, back in 2008, something similar occurred. It was on a much smaller scale, and that is when the incoming Obama administration ceded total economic control, essentially, over the economy to the rescue programs that were put out by the Federal Reserve, chaired by Ben Bernanke at that time. So we also have to remember that the current administration has not been too kind to the Federal Reserve, really putting the screws to them. And we've talked about the lack of ability of the Federal Reserve. They don't really have a whole lot. So the government's going to be the bad guy here, but the Fed's still providing the money. So this is reaching for unprecedented government authority and power to do anything to stabilize the economy. And, the central bankers needed the Treasury to nationalize the financial markets anyways. So in order to extend the funding that would be required to save them. The net effect, essentially, though, if you want it in simple terms, the Fed is granting the Treasury direct access to their printing press. Right? So buffer prior, but not now. This means in an extreme scenario, any administration, the current or the future administration, could use these newly granted powers to over this SPV program to instruct the Fed to keep printing more money. See, there's a very important difference between the Fed printing more money, right, which is quantitative easing, and purchasing corporate debt, right? They are essentially just moving liquidity around in the financial markets with money that already exists. Of course, new money is minted into creation. We do have an inflation rate that's supposed to be about 2% a year. But there's a difference between printing fresh money and the Federal Reserve taking securities off of the market and increasing their balance sheet, right? The Treasury plays a role in that. They are essentially just taking U.S. dollars that already exist and injecting them into the financial markets, right? And they're pulling securities off. So they're increasing the liquidity of the US dollar, and they're decreasing the liquidity of government-backed debt. Because again, that is what the commercial banks hold. They hold government debt, they hold government bonds and treasury bonds, and the Federal Reserve purchases those from them. Then they have the reverse repo where they purchase them from them and then promise to give them back at a higher price. So all of these things. Repo and reverse repo has been the Fed's primary way to balance liquidity in the financial markets and prevent a cascading, basically margin call on United States dollars, which we are seeing. But they are also now printing, the quantitative easing is the introduction of new money into the monetary supply. So, and remember, still $2 trillion that's missing of US dollars in circulation around the world. So keep in mind that now here's the thing for the markets, right? Abuse of this system could push the market to new all-time highs. Let's be very clear about that. Abuse of this system, the kind of unprecedented printing of money could, if you're looking 5 years out, could push the financial markets to new all-time highs. Is it going to change is it going to fundamentally stop the recession that we're going into? I don't think so. I've talked about this before. If I'm wrong, I'm wrong. I highly doubt that I am. But we are going to be moving into a financial recession. The damage that's been done to the economy just in less than a month is very going to be very hard to recover from. Right? Millions of people have already lost their jobs. Millions more are going to lose their jobs. And it's very important that we be aware of this moving forward. And giving the government unfettered access to the printing presses like that, essentially, you can call it not fettered. You can call it, well, it's slightly fettered. It's basically unfettered. Let's be real. Crony capitalism, which is not really a thing. Like people say crony capitalism. Crony capitalism is not a thing. It's just statism, right? There's nothing, capitalism is just capitalism, right? Capitalism works, it works less the more government involvement it gets into the system, right? So crony capitalism is not a result of capitalism. It is a result of statism, right? It's state influence in the economy that creates the ability for there to be this idea of crony capitalism. Crony capitalism comes from the influence of the state over the free market, and the gross increase of government power does not generate from capitalism. Capitalism does not lead to crony capitalism. Statism so mixed economies lead to crony capitalism invariably, because governments are a centralized system. All centralized systems, whether we're talking about AI or government or anybody, the man of the house, right? Like what do we do? What do guys do? Like we kind of expand our territory, and we mow our lawns and we set our fences, right? This is just the internal workings of all conscious organisms. Everything kind of tends toward a slightly command and control thing, because anything that's not in your command is a potential threat, right? So all centralized systems tend toward attempting to absorb more things under their control. And this is okay, right? This is knowable when we have a legal system and a economical system where we all try to get something for ourselves out of the deal, and everybody strives in their own self-interest, and there are rules that keep us fair. Because it's in the altruistic monkey, right? It's in our best interest to participate in the system, because we get more out of it than if we try to cheat the system. Very similar to the way the blockchain is constructed, right? With the proof of work and the blockchain riddle. It's in miners' best interests to participate fairly in the system and mine fairly, because if they try to cheat, they lose money, right? So the same in a free market economy, you participate in the system and you follow the laws, because the punishment is worse, right? And you are allowed to work and strive toward your own best self-interest. But this opens up the door for crony capitalism and dangerous investments running rampant, and potentially an exit of private players and of private sector players in the economy altogether, as a heavy-handed government begins to control the markets and regulates it, just throttles it to death. So this is going to have to be something we have to keep our eyes on, and something that is potentially maybe the most important thing going on right now. Again, we talked about this, right? Never let a good crisis go to waste, right? We already talked. We broke down the bill. We broke down the draft bill. All the stuff that they wanted to push through. All the stuff that they currently have pushed through, right? Only one person, Massey, only one person actually really objected to the bill. Strenuously to the bill, right? And I just, listen, we could debate for hours whether it's a good thing or a bad thing, right? We can go back to the financial crash in 1929, and we can argue that, hey, listen, the fact that, was it Coolidge, didn't intervene in the economy at that point in time is what led to the Great Depression. And sorry, and we're back. The fact that, Coolidge didn't do anything back in 1929, some people argue is what led to the Great Depression. And it wasn't until FDR came in and launched the Great New Deal that the economy actually picked up. Well, that's not true. It was World War II that caused the economy to pick up. Because what do you do if you're a company, what do you do if you're a government and you're broke, and these dudes over here are like a little less broke than you, but you're bigger than them, and you can go take their stuff, and now you're not broke anymore. Cycle of violence and debt. So keep your eyes on this, guys. I will be I'll be updating you guys regularly, but I just want you to be aware of this, right? Never let a good crisis go to waste, and the means and methods at which they are going to, let's say, sink to push their agenda can't be understated here. So, in honor of that, taking a lemon and chilling, I'm going to be distributing lemons to you guys right now. Thank you for all the support over there on DLive, my DLive people. Much love to everybody on Twitch as well. And don't forget YouTube. Love you guys too. All right, so with that being said, let's do Q&A. And let's get ready for the weekend, man. Not push the red button. Thank you guys. For some reason, I'm not getting YouTube chat over here, so highly appreciate the support, guys. All right, let's Jai English asks up here. Well, let me go to. Sorry, man. Let me actually look at what they got for me. Crypto Rick says, is there any other asset that I hold spot long when above the daily baseline apart from Bitcoin? No, there's really not. The reason why is because I trade cryptocurrency more than anything else, and therefore I hold my trading equity and capital in BTC. Actually looking at because I've been trading much more, well, I want to say much more, but because I've been trading CFDs and ETFs and Forex a lot lately, my capital split has now ended up somewhere around 60-40. I'm not going to lie. But when it comes to trading equity that I hold in BTC, right? Short below the day, hedged below the daily baseline, and long above the daily baseline has served me well for quite a long time. All right, Jai English says, if I were to trade on divergence of, say, the MACD indicator, how would I trade with it? So typically you're going to get divergence confirmation 2 bars after the low is in, right? So let's look at let's pull up MACD here. Right, so a very popular strategy is going to be trading the histogram divergence. So remember that your indicators are calculated off closing price. So when they say low, they really mean closing low, not actual low. So based on that, you would see divergence right here, right? So here's your close. Here's your close. You could really measure it from here too. And you can see that you have a lower low and a significantly higher low on your MACD histogram, right? Okay. So that's your initiation. Typically, I'm going to say the best way to trade divergence like this, let's just talk about regular bullish divergence right here, because there's 9 types of divergence for long and short. But and then there's regular and hidden. So when we're talking about regular bullish divergence, you can either, once you get the bullish divergence, buy right then. Remember, you're going to get confirmation, generally 2 candles following, because you'll have a low that's been established. And for candlestick structure, you need 2 bars on either side, or 1 bar if you're on higher time frames, but at least 2 bars on a lower time frame, particularly, to confirm a swing low, right? So what is a swing low? A swing low is going to be, let's see if I can get my drawing tool out here. Swing low is going to be a candle low, and followed by on the left, candle with a higher low, and on the other left, a candle with a higher low, and on your right, a candle with a higher low, and another candle with a higher low, right? They don't need to be sequential, but you certainly need at least a higher low on the preceding candle and a higher low on the following candle to determine a low. And reversed for a swing high. So you'd have your confirmation of this swing low on this candle right here. You have a higher low on this side, a higher low on this side. You also have a higher low here and a higher low here. Now, you could say to yourself, well, I don't really like the way price looks right here. So you could then use an oscillator. So Minx would be good in this situation. Let's get Minx pulled up. You know, I never know how to get rid of this thing. I don't even know if, yeah, it even shows up on the stream, but I'm just going to dock it over there. Let's get something like Minx, or we could even do something like RSI, for example. Not a big fan of it. Yeah, we don't really go oversold. So oversold would be a good indication. Cross unders, two-line cross indicators that are also centered oscillators like Fisher transform is going to be really good for this. Crossovers in oversold territory or crossovers in negative territory, you're essentially trying to remember that playing divergences is playing reversals. So in this scenario, once you've confirmed some bullish divergence here, you can either wait for dips to attempt to establish your positions and set your stop loss wherever it's going to be from your mean market entry, right? As long as it's reasonable and conservative. Or the other thing that I actually recommend you do is use some sort of baseline. That's what I would do, right? So let's say that, let's call this bullish divergence is my initiator. And once I determine that I've gotten a long signal, I wait for confirmation and I wait for price to close above the baseline, right? I would have got faked out once on this trade. And then in here, potentially it might be using a different baseline. And then you would have caught all of that. Would be the way that I would do it, right? Determine that you've got a deviation from standard market dynamics, in this case, bullish divergence, and then wait for price to actually get bullish and then ride the rest of that movement. Would be the way that I trade it. I wonder why this doesn't work anymore. I wonder if I have to refresh my... Oh well, we'll come back to that later. All right, let's see here. T-Mac asked, what do I think about Coinbase's new DeFi? So I got that. So we covered this yesterday in yesterday's Crypto Currently segment. So definitely go check out yesterday's video, yesterday's live stream. I covered their new DeFi, the Coinbase's new DeFi system. I think it's neat. I think it's really cool. I am pro DeFi. I'm not heavily invested in DeFi, but I think it's certainly something interesting to watch. Still very experimental, so you don't want to be taking a lot of risk with it, but it's certainly something that I think is interesting. And I think it's an ability to bring that to the masses. So again, certainly whether the current implementations of it are the future, most likely not, but it's a very good technology that I think is going to be very interesting to watch. And I like the idea that Coinbase is getting into it. And we covered this again yesterday, so make sure to go check that out. All right, other than that, Mr. Ether wants to check out Tezos. I'm not going to lie. I was looking at XTC BTC the other day, right? Based on what we said about Bitcoin dominance, I was actually a little biased to the long side looking at Tezos earlier today, right? Just thinking. Oh, okay. Bottom feeder's not going to work here. And no bottom feeder signal. Just checking. Taking a cheeky peek. All right. So Minx is telling us to kind of aggressively sell into this on the daily. We got a good short signal over here, a couple continuation shorts following through. But I'm not going to lie. I kind of like Tezos right here. Doesn't mean I'll do anything, but we're kind of, potential accumulation below the baseline. What do I want to see? Again, I want to see price actually get bullish before I look to take anything. Otherwise, we are in the entry zone for a short. So Tezos is going to do, Tezos is interesting, right? It could continue to just list lazily here, but it's definitely winding up for something. You can see volatility contracting right here. You can see the explosion level starting to get tight. And we've got a ways, right? Typically, once the explosion level dips below the dead zone, right? I don't know if you guys have noticed this, but once we kind of dip below the dead zone, we'll often get a pretty sharp movement, right? Like it occurs here. And what do we get? We get a sharp movement. So it's very similar to squeeze momentum, which is not a genius of an indicator. It occurs here and gets even tighter, and then there's the expansion right there, and that's what the explosion level is supposed to tell you in the first place. So we're contracting. I don't think it's going to happen over the weekend, but I certainly think that Tezos is one to watch. Again, getting above the baseline, I'll be relatively bullish on it. I like Tezos long term, but it's also equally possible here that we kind of follow through on these Minx daily CS signals that we've been getting for almost a week now. And we get some follow through to the downside, which would be pointing us down to about 2288. So neutral right now, my friend. All right, with that being said, it is 10:10. It is Friday, man. So much to talk about. Let's get over to the live scene and talk about this. Let's break this down. Thank you guys so much for joining me for another episode of Breaking Bitcoin Market Analysis. I'm your host, Justin Wise, lead analyst and senior mentor around these parts. I hope you guys have a fantastic weekend. It's been a pleasure to be with you these evenings. I would like to kind of get back to the noon slot, but we will be broadcasting next week at 9 p.m. Central Standard Time, 10 p.m. on the Eastern Seaboard, 7 p.m. if you're on the dreaded West Coast right now. And of course, that is about, I believe, 2 o'clock in the morning over there, UTC time. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comments section down below, and I will try my best to respond to them within the next 24 to 48 hours. You guys have been fantastic. Utilize the weekend. You've got a lot of opportunity, a lot of individuals. Listen, you can see it all over the interwebs right now. Go to Twitter. Everybody's like, yo, man, show me your Netflix list. Show me your, show me something cool to watch. Who's playing video games right now? Don't do any of that stuff. This is not the time to go to GameStop. This is not the time to watch Netflix. This is not the time to do any of that. I'm trying to be real with you people, okay? Millions of people in the United States and around the world have already lost their jobs. Millions more will follow, okay? If you are in any sort of economic situation right now where you're hurting, now is the time to sharpen your skills and be ahead of the curve so that you are not out there wading through seas of resumes, trying to just get any kind of edge on people. Get your edge in now and get out there and get your hustle on before the market is completely saturated. Most individuals are sidelined right now. They don't know what to do. They are completely lost. Not you. You should not be that way. You should have a plan. You should be executing on that plan. You should have all of your orders in. You should have all of your resumes filed. You should have all of your job applications done. You should have your plan for the next 5 years, your plan for the next 3 years. What do I do if things get worse? What do I do if things get really bad? What do I do about setting money on the sidelines? How much money do I have on the sidelines? How do I manage my investments over the next 5 years? These are all things that you need to be going over. So this is not the weekend to Netflix and chill. This is not the weekend to sit around and play Counter-Strike. This is the weekend to pull out the books, go over your budget, figure out your money situation, file some resumes, upgrade your wardrobe, do something, take some trades, scalp crypto. Get out there and improve yourself. Do it now before you have to wade through a sea of other people. Don't be flattened by the curve. Be ahead of the curve. So be ahead of all these other schmucks out here who are just sitting around, shit posting on Twitter and playing Counter-Strike and watching Netflix. Don't do that. Be ahead of them. And then when you are ahead of them and you're already there when everybody's freaking out, you're already taken care of, then you can sit back and relax and do some of those kind of more base pleasure things that we enjoy doing, right? But you have to put in the work. You don't deserve to do the luxury if you don't put in the work in advance. Otherwise, you're just a bum and you don't want to be that. That's not why you're watching this channel. That's not why you're here. That's not why you're trying to improve yourself. So get out there, get your hustle on, and trade safely, guys. I'll see you guys on Monday. Be good.